This is Eric Moth with Mother.com. Let's take a look at the AT&T 2-year weekly chart. And what we see here is a good example of the power of failed breakouts and failed breakdowns. In other words, how we can use that to gauge where things are flowing. For example, here we can see a breakout that was successful for a couple of weeks there, about 2 weeks, and then ultimately it would go on to fail. And it's the failed breakout that we can see here would have given us an indication of the possibility of prices moving lower, which is exactly what happened here for a swing trade lower. We can see another good example here. We have a breakout attempt that was unsuccessful. In other words, we did not close above the prior weekly closing high. That failed breakout was responsible for giving us an indication to expect prices to eventually roll to the downside. We can see another failed breakout attempt here. We can say there was a slight week number 3 breakout, and then we would go on to see a failed breakout. In other words, prices drop back below the prior weekly closing high there, and it is this failed breakout here that gave us the indication to expect a swing trade to the downside. Now recently we also saw something similar to that, which is this area here, where for 1 week there was a breakout that closed above the prior weekly closing high, and then that breakout would go on to fail. And so using that, anybody who would have seen that on a weekly basis could have positioned themselves to continue expecting swing trade to the downside. Keep in mind, this is a weekly chart, so these things take weeks to play out. Now on the other hand, we can also see examples of failed breakdowns. For example, take this weekly closing low, and we can see here we had a successful breakdown. In other words, we closed below the prior weekly closing low here, and then we have a recovery back above. So this was a failed breakdown. Ultimately, prices positioned themselves for a swing trade to the upside. Now we can also see, if we take this weekly closing low, again we see another breakdown. But notice what happened after a couple of weeks. We finally recapture the level. We go above the previous breakdown level, which is here. Upon recapturing that level, you can see prices have a bias to the upside for a swing trade to the upside. Now, of course, it doesn't always work perfectly, but it's just good for us to understand the consequences of a failed breakdown. Here we can see breakdown, closed lower again, but would go on to recapture the level back above the breakdown level for a swing trade higher. We can also see another example here where we have a breakdown. Eventually we do recapture the level, in other words a failed breakdown, and prices go to the upside for a couple of weeks. So that's how we can visually use failed breakdowns and failed breakouts to give us an indication of where prices are leaning. And we can use that for positioning ourselves for swing trades. Eric Moth with Mother.com. As always, good luck, peace, and blessings. EACS.